Going to probably look at a couple charts today from smartdefi.com, just on a few of those projects. I think we will look at that NOMA chart again, and I think we will do XPX perhaps as well. And just to show you that you don't have to be IBM or NVIDIA to follow these chart patterns that we talk about, and basically the language of the market all the time. It happens on all charts, any market, any time frame. You don't feel like what you're looking at because it's Bitcoin is only applicable to Bitcoin. Not true. Right. Also want to thank our ongoing partnership, and I would rather say friendship, with our friends at BidFi Exchange, BYDFI. You can open a no KYC account there, and I would ask that if you could find the link that is on our Blunhouse TA, at Blunhouse TA on YouTube. It's all in there, and it's also, of course, on our X homepage, which is at Blunt420, and you'll land on the Blunhouse Technical Analysis site, and the link is there. So, without further ado, and we will be awarding 2 more trading bonuses, by the way, as well today. And those people will get emails saying, hey, you won. Now, moving on to this chart. What I want to talk about today, in a little bit more detail, is multi-timeframe analysis. That's where we have one time frame, and then we analyze it and make some decisions and some assumptions and some theories, and we back it up. We look at another weekly, and then a daily, or daily and 4 hour, 12 hour, however you want to do it. But why do we start with the longer time frames? And it's simply because we need to establish trend. Right? We want to know where the trend is. It doesn't matter what you're trading, you need to understand the trend. And in order to do that, you need to look at those longer term time frames first. And the reason I bring this up is because I sometimes get a little bit frustrated when some people reach out and they have problems with trading that are so easy to fix. And for example, they might be trying to long something. Maybe it's a crypto project. Use that as an example. They might be trying to long it off a very small time frame, 5, 15 minute, without ever looking at a daily chart. And if they would look at the daily chart, they'd soon realize that price has fallen off a cliff, and the only little opportunities you have to go long are these 1, 2, 3 green candles in what turns out to be a further downtrend. It's the literal example of catching a falling knife. And it doesn't have to be that way. And the easiest way to avoid that thing that sounds so bloody simple is to just start at the top and work your way down. Right? Like this Bitcoin monthly chart is maybe exaggerating to make a point a little bit. But again, because everything is fractal, this is what we get to look at. Whether this was a 1 minute chart, an hourly chart, you'd be really happy with it no matter what. Right? You get a nice green candle. Actually, here's your buy signal. Here's your early entry opportunity, which has a little bit more risk attached to it, but there's our confirmation. You break the 20 on the monthly, retrace a little bit, but boy, you catch a nice bid hard off the 20 and the 50 on the monthly, which is gift wrapped. But how many people are looking at a chart like this, a monthly chart, when it was doing this? Nobody was looking at the monthly chart. Very few. I shouldn't say nobody, because that's not fair, but very few. But for those that involve multi-time frame analysis and fractal analysis as part of their process, those individuals would have seen these types of things early, way sooner than anybody else. It's important to know the big trends. If this is your trend, and look, if this was a 5 minute chart, we'd be excited, right? Wow, nice green candle off the 20 and the 50, the divergence in the 5 EMA and the T line. Like, we know that's the recipe for acceleration, and boom, price goes up. and it stays elevated above all of the benchmarks that we use for trend, right? Or I use for trend that I'm sharing with you, which is the 5 EMA and the T-line, which is the 8 EMA. These monthly candles just turned out to be red candles in a continuation pattern. Keep in mind, folks, on this monthly chart, you haven't even hit the 20 yet at this point on any sort of a retrace. And yeah, context is important. It's a monthly chart. This is a long period of time to be bullish, but you know what? It is what it is. You trade what's in front of you and you protect yourself from the stuff that could be around the corner. Now, when you look at the weekly chart, of course, what do you see? It looks a little more rastered. It's it's up, down, sideways. You can see the big spikes a bit more on the weekly. And if that's all you were looking at, that could be a little freaky, the moves up and down. But to calm your brain, because what we like to do is filter out noise, right? Does the monthly chart filter out all of that and chattery stuff that we saw on that shorter time frame, although it was the weekly? Yeah, it did. This chart was telling you that based on our metrics, this chart is still completely bullish. And what I think, or you think, or anyone else thinks about where it should be and where it is completely irrelevant, because the only thing that matters is price on a chart. That's it. This is about what money does, not what people say. Right? We're here to track what money does. If we want to track what people say, we go into a space or something like that. But we're here to track what money does. All the other stuff is just noise. Very interesting at times, right? But ultimately, it's noise. The only thing that I make decisions on primarily is the chart. Macroeconomic and other those issues aside, it's the chart. Chart's bullish on the monthly, and it's still bullish on the weekly. What are we getting on the weekly? If this is all that we were looking at, that was giving us confidence that price was still moving higher, continuations off the 50-day moving average. Basically, staying above the ice. You're above the ice, you're solid. You don't necessarily want to break through the ice because it's a problem sometimes breaking through again. Right? But on the weekly chart, you would be seeing these continuations, which gives you bullish confidence. And of course, that monthly chart can't be denied. Right? But these are the things that you have to do as a, if this was a job, like you have to treat this as a job. This is your profession. Think of it as your profession. That's what this is. And if you treat it like that, as a profession, you do all of the things that you need to do to mitigate risk. Because again, remember, no one's going to look after you better than you. Here's our volume profile. Okay. That's what I want to see, is the volume profile. This weekly chart was getting, and this is why we use major moving averages. When you look at it just by itself on the weekly, still obviously a bullish chart, but does it not help you when you can see what you're bouncing off of? Sure you can, right? That's very useful. What's this look like on the daily? Well, here we go. Still bullish, right? You like getting continuations off of the 20 or the 50-day moving average whenever you can. And what you have to give yourself, and a lot of this just comes with time, is the confidence to analyze the chart and feel good about what you're seeing. Again, I hate to go back to the monthly, but the monthly chart is as bullish as we can get. The weekly chart, all of the things that we look for, continuations off of major moving averages or structural levels, all bullish. The same rationale applies to the daily, right? And when we talk about, failing one level and finding the next, here we look at it in real time on the daily chart. What happened? So up here, after consolidating for a while, price decided to fade. So we failed the 20-day moving average. And we know instinctively that when we do that, we're looking for the next level down, which is, in my world, the 50. I talk about how relevant the 50-day moving average is all the time. Right? This is why. So we broke the 20, we came back to the 50. It's the first touch of the 50 since we broke the 20, and first attempts typically get support or bounce. Well, what do we get? We get exactly that with these wicks. You get 2 touches off the 50, and price starts to move higher. But we're not convinced on this daily chart that price is going to break out yet, because we have not broken through the T line. This is one of the things that we talk about in our analysis that saves you from the fake out, right? It makes you, this is insurance that we're paying right now. We don't have a buy signal yet because the market hasn't confirmed on this time frame that it's ready to make a leg higher and confirm a trend up. So we've come back to check the 50. We bounce, and where do we bounce? Of course, to the 20. Is this the first attempt of the 20 since it had failed? Yes. First attempts do what? It should bounce, right? Or get some pause here. And here we are to the, basically to the penny on the 20-day MA. But if we back this up even farther, what are we fighting with on a shorter time frame? There's always something, right? There will always be something that we're hitting our head on that maybe we can't see, okay? So I just added 100 AMA because I shortened the time frame, so sometimes I like to see what's in between those levels. And lo and behold, on this 4-hour chart, that daily resistance that you see on the 20 that you couldn't break through is what on the 4-hour? 100 AMA. Just demonstrating that this is a fractal world. Right? That's why all of this makes sense. And then the things that we learn and apply to one time frame, we're simply going to do it here as well on the 4-hour. Here's where you broke everything. We talk about twisting moving averages, which is all that consolidation, right? Because price is really going nowhere over longer periods of time. So all of these averages come together and twist. When they let loose, it's either a big move up or a big move down. Well, in this case, it just happened to be a big move down. And you get all of that break and divergence that we talk about in our script that shows you the trend is down and gives you a safe signal to take that trade. And now we bounce. This is the first attempt at this level. And what's happening? We're finding some resistance here, which is the same resistance that we see on the daily chart. Again, it's just a great example of the nesting dolls, right, that we talk about all the time. You'll always find price is either bumping its head or sitting on something. And the risk on this chart, we can even back this up further, and this is just a support and resistance level that we drew, I guess, earlier in the week. It's obviously relevant because you can see price struggling with it. On the hourly, have we broken into a confirmed downtrend yet? No, but I bet you if we back this up a little bit more to the 15-minute, which is very telling, there we go. Multiple time frames. Everything is fractal. What happens on one time frame, you're going to find on another. So now what we have, now that you see this 15-minute chart, that's, and again, you know, we talk about time frames all the time, and I know a lot of you trade on short time frames, shorter than this, but for our example, let's just say this is as short as you're going to get. Right? If this is to break down on the 15-minute chart, so, you know, this is 2 equal points in price. What you're looking for is for price to fall back and break this structural level here. And, you know, then by that point, you're into a volume gap with draws for price to the downside. When price rolls over, current price will look for past. There goes the signal. When price wants to scoop up, current price will look for past, but only to the upside. But in our example right now, it's to the downside because we're doing this live. If this breakdown continues on this 15-minute chart, there's basically a minute 40 left on this candle. What do you think price really wants? We've broken the 20, so if we break one level, we find the next. That's part of our philosophy. Where's the 20? Or sorry, the 50, way down here. Below the upper value range and well into this volume gap. The volume gap, how did it get there? It was created by these big, fat green candles that are filled with nothing but fairy dust and air. And when they get tested and retraced on the downside, there isn't enough inside of them to support price to the downside as it comes with some velocity. And what will it look for? It will look for something from its past where buyers and sellers have shaken hands previously for a place to rest. That could be a structural level. Some might say, hey, you know, here's some tops and bottoms like right in here. Obviously, that's the point of control. That makes sense. My first step is the 50. So if I was actively in this trade, shorting this chart, I would be short to the 50. That's just how I trade. Right? And whether, well, there we go. We just took out, we tagged that upper value range. These are targets. We talk about this all the time. Right? When you're trading all above everything and price gets exhausted and it's going to fall, isn't it nice to know where it may fall to give you opportunities to take profits along the way? Find targets? Yeah. Right? We're not even getting a snapback on this candle, which is a little concerning. When I say snapback, I mean, okay, you have a big impulse down. The horse doesn't like to get far from the barn, so it might look for the T line or the 5 EMA. It's not doing anything like that yet. And if it just lags, it's going to drop. Look where it's as long as it's in this gap, it's really hard for it with downward pressure to pop higher. It takes a lot of money to do that. It's the trend we're concerned about, right? We're on the right side of the trade. We got in early. You would have been shorting this green or this red candle, and you're ahead of the game. Now you're in the driver's seat. You own this trade now. If you screw this up and give it all away, it's all on you. Like, our job is to give you the safe entry. Well, there you go. There's one, right? Equal tops in price along the upper value range after a big move higher. Yeah, there's a lot of air in here, right? The velocity in price spread all these averages out. And that's great when you catch it on the way up. But what are you going to do with the rest of your time? You're going to sit around and wait for it, you know, for another opportunity long to come? Because if you want to be a complete trader, you have to learn how to sell long and short. And after a while, you're instinctively going to try and find these types of opportunities. You're happy to, because you're indifferent to price, you're happy to long it. That's not a problem. You know, beautiful touch off the 200 MA right off this time frame, which is the 15-minute. That was your cheater entry if you wanted to take it. There's your confirmation. All the divergence showing you that there's momentum. Even the sideways stuff, you wouldn't have gotten faked out because you would have been using the system and not washed that trade. You would have been good. And boom, price more than 50% from there. You have no idea what happens after the current candle that you see. Is all you can do is look into the window that we have in the methodology that we use, right? We're using fractals. If we're trading this 15-minute chart and we're looking for short confluence, well, okay, this is obviously a bearish chart now. So let's look at the 30-minute just as an example, because we're just using fractals again. On this time frame, what is price looking for? I would be very confident to say on the 30-minute chart, it's looking for the 50-day moving average and the upper value range on the volume profile. See what happens when price gets into these volume gaps? We talk about it every week. Bang. Can't hold it up, right? Just a different time frame. So that would be my target on the 30-minute, starting to show that you're getting confluence to the downside. Now we flip to the weekly, the hourly. Now the hourly is not as advanced as the previous two we've just looked at. But do we have targets to the downside on the hourly chart? Yeah. Are they super strong draws? Yeah. What's down here? Well, you've got the 50, you've got the 200, there's the 20, there's the point of control on the volume profile. What else do you need? That's a lot of draw. Do you have a confirmed sell signal yet? No. Not yet. Not on the 1 hour. But this is why we use multi-timeframe analysis, so that you can get confluence on the trades that you're entering. But in order to get it, you got to look forward and you have to look backward. Right? Start with the trend. Right? And the long-term trend on the monthly chart is going to tell you one thing. The weekly chart something else. But you'll notice where it breaks, right? And that's where you get to earn your money. Now here's our 4 hour of the same Bitcoin chart. And what do we see? You broke everything on the 4 hour, and we were looking at Bitcoin 4 hour for a while. And you finally just couldn't break this level. So you know what? We're going to have to go get some flowers and chocolate and try this again. And that's what we're going to do. This is a bullish type of pattern, right? You start making higher lows and higher highs. That's bullish. So we have to see here how this plays out on the 4 hour chart, because on the shorter time frames, whoops, went too far there. This is why we use targets, folks. You're short to the 50 instinctively without even thinking about it. So this is why you have a trading plan. Let's say we're working off this chart. And I know before we came on air, we were talking about this a little bit. So I promised you that we would spend a little time looking at this stuff. So a lot of you, when you're playing these short time frame charts, you'll find that you get washed out, stopped out more often than you like. And I'm aware that a lot of you might be using a little more leverage than I might be comfortable with sometimes, but I know you're doing it. But if that's the case, you don't have any time for you to think about anything to happen when things go sideways, right? And we talk about trying to make your trading as automated or robotic as possible. And what that means is there are certain setups that we're going to look for and spend most of our time trading. And that will mean, for all intents and purposes, that you're probably going to make less trades. And some of you will say, well, that's boring. I don't want to make less trades. You know, I want to get my money in the game. I want to start earning, so on and so forth. The more trades you make, you're probably going to make less money. Less trades, focus on good setups, focus on a handful of things or assets that you want to trade and you know really well. Concentrate on that. And concentrate on taking the setups that you know have the highest probability to work out. And I'm just going to use this 15-minute chart as an example. Now, when we're talking about short time frames and using leverage, be very, very careful making those trades in purgatory. And what I mean by that is the only way for those, well, not the only way, but the best way for those trades to work out profitably and safely, I find, is to buy them or trade them in the extreme ranges, not in the center of a move up or down. And I think that's where a lot of you get conflicted, is that you're making these trades in the midst of a move that's already somewhat played out. And there's a little bit of question, like, are you making these transactions in the middle of a reversal, or, and then things go sideways. And again, in my experience, the best way to take advantage of these types of things is buying them at the extremes, the well overbought and well oversold areas. And when we look at this 15-minute Bitcoin chart, price, again, when you're trading above the 20, the 50, the 200 and everything, at some point in time, you have to be cognizant enough to look over your shoulder to see if something's coming. You start to roll over, you break the 20, you break one level, you find the next, and so on and so on, and you finally break down and find the 200. There really isn't anything of significance on this time frame beneath this as far as major moving averages go, with the exception of just this lower value range on the volume profile. So you have price now trading below everything as opposed to above and rolling over. So now we're looking for an opportunity for it to break out. And this, again, is what you'd be looking at on the right side of your screen. Right. You finally come back to the 200. And is this the first touch of the 200 since you broke out? Yes. What typically happens on those first attempts? Price bounces, right? So we have that instinctively in our heads, that we're looking for this bounce, because we know there's a higher probability of that happening. We've gone through the process of breaking one level and finding a next. Right now we're ready for another move. There's your touch. This is our little, I'll call it the cheater entry. I hate to do that, but what I was trying to do is program a visual way for you to see that there's money coming in. Right, there you go. You get a little bit of resistance at the 20 and 100, but you're working under a confirmed buy signal with a bounce off the 200, which is your most basic bull bear indicator on any time frame that you're trading. Now, I would suggest to most of you, and I think this is what happens, is that you don't have a trading plan before you enter the trade. And that becomes problematic because what happens is you're not taking profit regularly, right? You're literally kind of hoping and praying and, sitting in your chair like a race car driver trying to will price in the direction that you want it to go. And that's not how it works. You can do that, but it's not necessarily a recipe for success. And one of the things that most of us don't do frequently enough is take their profits at specific points religiously, whether it's a percentage that you're using or you're using targets like I may use. Whatever methodology you use is fine with me as long as it has some structure and some provability. And you obviously wouldn't be using it if it wasn't working. So if you're using percentages, just as an example, maybe you find that once you're in a trade and at 20% profit, you're going to take X off. And then at, another percentage, you're going to take Y off and then leave the runner or whatever you're planning on doing. But whatever that is, it needs to be consistent and constant. And if it feels boring, you're probably doing it right. We literally want it to become automatic. But these profit-taking levels have to be based on the time frame that you want to base your trades off. And this is where I think a lot of you get conflicted. Because fortunately, Many of you are getting great entries. Like, you're showing me some of the trades you're making, you're showing me where you're entering, and you're doing really well. What is happening, however, is that by not taking profit at regular intervals or at pre-program levels, you let the trades run too long, like this one as an example, and it completely retraces. Like, so we were talking before, is that, you know, a lot of you catch these runs, like you're buying off the 50, you know, you've got the early entries, you see the signals, like you're doing all the right things, you see the divergence. But once you're making money, something happens. And it's like you feel, I can't make anything but money, and then you start hanging on too long, and then things retrace. And then here you're probably hoping for a bounce higher that's going to save you or something. Well, it came a little bit, but then it broke down. And then before you know it, you've given it all away, or right back to where you started. Nobody wants that. Right? So if you're trading the 15-minute chart, trade the 15-minute chart. Right? Where your confluence comes in handy is with your runners, right? But don't change your time frame just because price went in your direction. And I know it's tempting not to do that, and this is why you're going to be forced, whether you like it or not, you're going to be forced to find a time frame that is kind of the happy median between engaging you and taking the type of profits off that you want to take. Right? So don't open a trade on the 15-minute and then have that 15-minute chart work out beautifully, but be unaware of what's going on other time frames, and all of a sudden it all unwinds. Right? If you want to make a trade off a longer time frame, then make a separate trade off a longer time frame. Don't keep remolding the trade that you already have in place. And again, I understand it's tempting not to do that. Some of you don't, you know, you might not have the liquidity to run those types of things, and you might be all focused on a small amount. I get it. But manage the trade you're in with some discipline on the time frame that you're trading it in. And if you start feeling like, hey, there's maybe more opportunity on another time frame, because of the learning curve, don't confuse yourself by trying to all of a sudden take that particular trade and mold it into something else. Set your targets before you go into the trade, hit all your targets, and then move on. But don't keep remodeling the same trade to try and make it, work out for you. Get really good at trading a particular time frame and stick with it for a while. And when you feel like you may be up to a more challenging, maybe you want to you have some higher targets, but you need to have more time to get there. Do that. When I tell you to book targets in advance, this is why. Right? So sometimes in futures, you see, like in the mornings when the market's open, you see crazy price swings. Do you think those price swings just go randomly up or down? No. They're looking for levels. As erratic and inexplicable as they are, right? They literally will tag, like if this was open on ES in the morning and this was a 15-minute chart, you'd have this big down move. You'll see this all the time. You'll tag a major moving average, in this case, say it was the 50, and then boom, prices snap back a little bit. And that's the only trade those guys make for the day. I will always have orders set at these what seem to be unreasonable levels for reasons just like this. We talk about it in our Telegram all the time. But even on this 15-minute chart while we're looking at it, what's the risk here, right? We don't have a confirmed, we just have a healthy snapback. That's good, right? We want to see that. But we don't have anything confirmed yet. All we have is this 15-minute candle that hasn't quite hit the point of control or the 5 EMA. And what I was going to say is we risk falling into this gap again on the downside. So we will see. And if this is a little failed breakout, what happens? Well, you make an arch and you come back and you take out the previous wave's low. Like, it's funny to see this kind of stuff in real time. But this is how you're going to make your money. Not by, stick handling every trade. Get lazy, right? Hit a buy order here. You don't have to be using leverage to do it, right? Get familiar with the ebb and flow of the market. The things that we see, and that was crypto, the things that we see all the time are on every chart we look at. Right? So this is the daily chart of United Health. What's this? Failed breakout, maybe? Wick up, don't even get to the T line. Arcing over, right? You're going to arch over and you're going to do what? Take out the previous wave's low. We show this all the time. In real time. And most often, things kind of pan out the way we talk about. What are we looking at really? What do we really think this wants? How about this? So, what does price look for? And I'm using this because it's an extreme example. When you break one level, you find the next. When you break that level, you find the next. And when you break that level, you find the next. And you rinse and repeat. First attempt to the 20, fails, blah, blah, blah. We know the drill, right? All of this, whatever this is just a major breakdown. But regardless of that, is this a downtrend? Yes, it is. On the weekly, is this a failed breakout? You wick the T line. Yes, it is. Did you come back and take out the previous wave's low? You sure did. Whether you took the base of the candle or the wick of that candle, you still did. We're not done yet. Everything is fractal. We see this time and time and time again. What we just demonstrated on that weekly chart with price coming up, wicking an area and arcing down, we're now looking at here on this daily. And we can continue to use fractal type analysis over and over and over again to reapply the rules that we use. Here's on the 4-hour. United Health, everything twisting around. Prices consolidated along what? The point of control. The chart doesn't lie. If you know how, this is the language of the market, right? Mathematics is a language, people. And what we're looking at is a derivative of mathematics, right? It just is. A derivative of mathematics. That's what we're looking at. And thus, it's a language unto itself. Real-time representation of what people are doing, or what money's doing, and not what people are saying. And in the process of all this, you can kind of get an appreciation for time. If we look at this weekly chart, did this break down from, 600 and change to 240 happen overnight? No. Happened fast, but not overnight. And this volume gap that you see here was created by what? Yeah, exactly. These candles that on the downside are made of just velocity, creating this gap. And one day, the time will come when you'll get to challenge this gap to the upside. And you'll be able to make your money to the upside. Right? It's not a knock on anything. This is just the chart. Because we have one job, to monetize the chart. Not to crawl in bed and hug what we own. We don't do that. We're traders. We don't fall in love with stuff. We don't care. I don't care who the CEO is. He doesn't care who I am. I don't send him Christmas cards. He doesn't send me Christmas cards. Nor does he ask me my opinion 9 times out of 10 on what I think. My job is just to monetize what they do, to the upside and the downside. That's it. It's as simple or as complicated as that. And once you understand how the language of the market operates, and that you're actually reading it and interpreting it, you're vulnerable to making lots of mistakes. But this here is just the anatomy of a breakdown. Sorry to hurt your feelings. If you own it or you're not short, that's a you problem. What's price looking for? When price is falling, it's looking for somewhere to sit the hell down. It's looking for a bench of past price. It's looking for something it can hang its bootstrap on as it falls off a cliff. In the process of going parabolic, you blew out and fanned out all your major moving averages. This is what happens, folks, when you can't continue to pump air into the tires anymore. For whatever reason, I don't care. I'm not interested in the earnings. I don't give a shit. Could care less. Don't care. All I'm telling you is that you break all this stuff, and this divergence between the T-line and the 5 EMA sticks, and you keep making these failed breakouts that turn around and take out the previous wave's low on a fractal basis, you're screwed. So sorry, I'll see you at 200. This is a bench of past price that is just something that you might be able to hook your pants on the way down. Oh, and the bottoms of these two skis. Oh, and 40 years of price history. You don't think that after breaking all of this, that 40 years of price history isn't going to be the bench that it sits on? Anybody want to have a bet? I know there's lots of people on Twitter that do. So put your money where your mouth is then. But I'm pretty sure we're going to see you at 200 bucks. Charts don't lie. Current price is looking for past. That's what's going on. It's as simple or as complicated as that. And until a whole bunch of money comes in and you're still trading as a confirmed downtrend, then you're still going down. There's nothing we can do about that. But everything is fractal. And it doesn't matter what you're reading, there's a fractal analysis to be done. There just is. Let's look at, because we were asked towards the end of the last session to look at Monero, which we did. And we were like, let's back up here a little bit. That's not looking too healthy. What's the downside risk? This bench of past price and the 200 MA. And boom, we broke it. You get into this, right? You know you're coming down here. You didn't even wait around, and you're just going to head straight for the lower value range. At, what is that, 235-ish. And if you don't get any love in here, because this often kind of frames a range, but if you don't get any love in here, what are you looking at to the downside? We're looking to take out the previous wave's lows, which we've done. You're going to look for some past price to sit down on. This is kind of sketchy, right? But we talked about it, right? And when we flipped up the weekly, there you go. There's the 230 number, 232. On the daily, we were looking at 235, I think. So that's how we're using this analysis to say, okay, fractally, because we understand how price moves, that's a legitimate target. We can meet it on the weekly. We can meet it on the daily. The challenge for you, the trader, is to be patient enough in this case, a downtrend, for price to fall down to this target and not get too greedy in the meantime and use too much lev and wash yourself out on a daily basis or something like that. But the chart is telling you exactly where it wants to go. These candles that we talked about that are filled with fairy dust and air are not going to be able to hold up a candle coming down with velocity as you see here. It just doesn't have it. If we back it up onto the 4 hour, what have we done? We failed, and I didn't even know this was here, as I didn't look yet, but there you go. There's 1,000 MA on the 4 hour. So we've literally now broke one level, found the next on this time frame. Look where you get just a little bit of support right along the 200, and it just doesn't go anywhere and fails. First attempt to the 20, failure. Second attempt breaks through. First attempt to the 50, failure. We're recording all of these things. These things are on on YouTube at Blenos T8. You can see them time and time and time again. Now, what are we doing to the downside? Because there's velocity to the downside, we're fanning out all our major moving averages to the downside. And eventually, when price retraces and starts to move higher, do we have targets to the upside now? Absolutely. And this is where your trading plan, again, if you're going to start looking for opportunities to go long in here, you're going to be setting targets for take profit levels. I used to take, I would take so much off at certain levels, and quite honestly now with the craziness in the market, I'm often just tempted to take it all off. Right? But those are decisions that you get to make. Right? But you're in control of your trade. If we get you in early, short, are you concerned about these retracements that, these are normal movements in price? First attempt typically fails. These are just happen to be 4 4-hour candles in the continuation of a downward trend. We didn't get any sort of buy signal here. There wasn't enough momentum to push the 5 EMA through the T line, and the down trend continues. And when you would see the 20 there, you would know that's likely resistance and that it would fail. And lo and behold, you were overbought on your stochastic RSI and your Fisher transform that I really like. So we're overbought at resistance. So what do? If you're not short, you go short. And if you're short already, you just put your feet up on the desk. And again, you can see all of this divergence here telling you that there's more downward price movement. Where do you get a pop? Obviously, you're being showed here, right? Now you're oversold. And price moves higher. But just because you're oversold and moving higher doesn't mean that you're going to make an all-time high, right? What's the resistance on the chart? The 20, a little bit of a pause. There's the 50. First time you've seen the 50, yes. What do you get? A rejection. You see this all the time. And look how overbought it was. Overbought at resistance. Overbought at resistance. What's the takeaway? Don't long into resistance when you're overbought. Okay. Don't long into resistance when you're overbought. That's what this is. This is your friend who says, I don't know, man. Every time I buy something, it shits itself. I can't figure it out. Well, here you go. That's why we do this. That's why we learn to read price on a chart, so that we're not that guy and we don't have to deal with that friend. Don't long into resistance when you're overbought. If you were to look at this chart and you see, price start to move up, if you've spent more than 5 minutes with me, you would know that you have to be careful at the 50 when it's the first attempt, right? Instinctively, you know this. So if you took this trade, and this is where you need to alter your trading plan, because you would look at this chart saying, There's the 50, and I have to consider that as being resistance. You need to be thinking about that so that you're not surprised when something doesn't go your way. Breaking this level is important. It's going to be a challenge now to pull this up. Where does price want to go? Well, let's shorten our time frame, see if we can see anything. We might, in this case, have to go farther out. Let's do that. There's the 50. Let's look at the monthly. It's not going to, shite. There you go. Is that possible? And this is what I love about fractal stuff, right? Because it will give you an appreciation for time. Something that the older I get, the more I value. But on this monthly chart, you can see how long, we don't trade every little cross, right? On any time frame where we see a stochastic RSI. But the takeaway here is that the damn thing was well above 80 for like a year on the monthly. This is the first sort of breakdown, and obviously we had this level here for a reason, and obviously broken it. Do we like to trade below the T line? No. Do we want to close below the T line? No. What would a target be on the way down? Well, if this was a 5-minute chart or a 15-minute chart, you would tell me it's the 20. And the same rationale applies on this time frame. Just because the time frame is longer doesn't mean the fractal analysis changes. So the 20 becomes a target at, let's call it an even 200. So what's an even 200 on the daily? Right here. So when we draw these levels that you see all the time, they're there for a reason, right? You've seen when I draw levels, I'm usually looking to connect tops and bottoms of past price, right? And we talk all the time about one of the things that I like to be able to connect when it makes sense is the T line and or the 5 EMA. Because I often find that these levels, when I draw them, are really consistent. And I'm not really sure if it's because there's standard deviations involved and stuff like that, but they do provide us with those levels. And they're usually very accurate. And where is 200 on the daily? Remember, this is what, was it the monthly? Yeah, there you go. There's the monthly. There's the weekly. So what does the weekly suggest based on that level that we were able to identify on the previous time frame? It's suggesting that we would fail the 50. In order to get here, we got to fail the 50, which kind of implies that maybe it's the 200 and this lower value range that it actually wants. And when we look at the stochastic RSI, which tells us quite clearly that there is some downward momentum here. I want to show you something really quick. This. So you see how it creates that little point and kind of makes like an A shape? When I see this in this indicator, I pay attention to it. It's usually the sign of a continuation to the downside. If this was flipped over and the point was to the downside, it would be more of a snapback up. But when you see it like this, it usually indicates something else. The Fisher transform that does a real nice job of telling us trend because it creates a Gaussian channel. That's a filter because we believe in fibs, fractals, and filters. That's why we use it. And then finally, our MACD is the moving average and signal line above zero, of course, which is in bullish territory. Does it look like it wants to swan dive? Yeah, it does, right? It's had a nice run to the upside, and maybe now it's time to take a little bit of a break. So you can see on the weekly and pretty much feel on the weekly the money coming out, right? And again, these are things that will become instinctive to you. You know, if you were to see this on a 15-minute chart, you probably would have shorted that setup, right? Well, just because it's a monthly doesn't mean you interpret it any differently, right? There's our sell signal. This was chop. Here's our confirmation. It came as it broke a major moving average, which is a sign of weakness. That's what you're looking for on the weekly, and the daily, the monthly suggests even further. Could enough time go by and price movement take place that the 1000 MA kind of winds up somewhere within a hair or two of that level? Yeah, I think that might happen, right? Now, do I look at this as the end of the world? No. I don't. I don't look at it like the end of the world. If this is something that I want to own, I'm probably quietly excited about it in a sense, because I'm a long-term investor and I understand that the chart will have these types of ebbs and flows. And these pullbacks ultimately become buying opportunities. And that's where fractal analysis is really helpful, because you could pick what you think is a buying opportunity. Hey, and I'm sure there was a lot of people that did it. I'm going to buy at the 200. They're probably not using a volume profile, and they might not use our methodology, but they believe in the 200, and they may say, you know what, I'm going to consider buying there. And then price rolls, right? If you were looking at this time frame, you'd be like, I got to wait because there's too much draw to the downside. Look farther. Remember, look down that tunnel, right? There's a light at the end of the tunnel, and it's telling you that somewhere down around here, the 200-ish area is where it might be happy. And interestingly enough, it kind of matches up with the 5 EMA from way back when. It's not pin the tail on the donkey, but sometimes it's pretty darn close. Look at that. That's why I do that. That's literally bang on that level, that 200 level. And that stuff just makes me more of a believer in the targets that I'm seeing. Okay, so just break down time frames. You'll see everything that you need to see. Now we're going to look at XRP, and we're going to do it over the long time frame. Not really fair when we don't have a trading history. But where did you get your big move? I don't know, right off the 20, right off the 20 on the monthly, and all the stuff that we used to validate what trend is doing still applies. There's the divergence. Impulse up. We talk about these sideways candles that just simply, they don't break down and they hold the 5 EMA and the T line, and this is where when they, that we want to buy them, because they're another opportunity to trade higher. We see all this divergence here, so we know price wants to move up still. We're being told, the chart's telling us. Okay, fine. There's your weekly. Where do I really enjoy trading this system, regardless of time frame? When it's overbought and oversold. Here we are. Take this off. This is like watching the sunrise when I see a green candle at the 50. In this case, you get the 20 as well. And a buy signal. Like, did Santa come? Because that's what that means. Santa's coming. Boom, price goes up. Divergence breaks. That's representing all this momentum. These red candles, they're just red candles in a continuation. You don't break any of this stuff. Boom, price goes up. Simple. Just keep, now you're looking like maybe we got a problem or a little bit of trouble ahead. Why did I say that? Because I didn't like the 20 MA on the daily. So this arcing thing that we see here, so this essentially, when this meets, will be the first, and let's just make note of this day, okay, so that we don't forget, or I don't forget, because I get old like dirt and I do forget. So what I'm afraid might happen here, because this is going to be our first attempt higher at the 20, right? And I don't really want to count that. If this is the first attempt, I don't want it to be made with the 20 MA arcing down on top of it. Why? Because I'm at a premium. I'm trading in this super light area up here, and I'm hanging on by a thread to the upper value range that I can't seem to break, with the 20 coming down on my head and this big gap beneath me, and the point of control sitting in here, with the 50 as a draw for price and the 200 as a draw for price as well. That's where the first time I go, okay, I'm going to pause a little bit. Is this going to be a failed breakout? Right? We don't have a green indicator yet here. So what are we going to do? We're going to shorten our time frame. This is how we don't get hit by something we didn't see coming. And we just repeat this on everything we look at. So the 20 on the daily, that was giving us a little cause for concern. If we dial back the time frame and go to the 4 hour, we're dealing with the 100. That's arcing down. Still bullish, right? You're under a bullish signal. You have the support of the 200, but you really got to be aware that this could be a problem, right? Or you're getting at least a little resistance. The fact that you didn't make a higher high here and you created an equal top is a little concerning. You've got a lower, like a higher low, yes, but you weren't able to make a higher high. So we don't want to long into resistance until we figure out what's going on. Right? So, and when you can't decide, you stay away. When you don't get the feeling that you want to get, that you're on the right side of the trade or will be, then don't make the trade. The best trades, sometimes the best trades you make are the ones you don't execute, just because it protects you. So this market has flipped a little bit since we've come on. Okay. This is why we do this live, right? So, we talked about this kind of, I think last time we were getting support from the 200. This is YM, which is the futures contract for the Dow. And that's how you can find it on TradingView. It shows as YM1. So this is the 4 hour. What happened here? Well, let's actually back it up to the daily. Broke the 20, found the 50. Failed one level, found the next. Failed one level, found the next. Price doesn't want to go above that upper value range. And all that's telling us is that at this time, for now, nobody wants to be the one to run it up there. For whatever reason, I don't know. Maybe it's geopolitical, maybe it's economic. Don't know, don't care. Is all I know is that the chart's telling us that nobody wants to take it past there, and it created two equal tops at the upper value range. You break the 20, you come back to the 50. And this wick of the 50 in a pullback, I don't like that, because if we take out the previous wave's low here on the daily, we fail the 50. Fall into this gap with the 200 as a draw, the point of control as a draw as well. So you can start to see how this might break down. And, if we roll our time frames back, that's how it shows up on your 4 hour chart. And again, why do we use fractal analysis? So if you were trading futures, you're going to want to know in advance, if you can, when something's going on that you can monetize. This resistance here that you see, you can see how we've broken everything, but in this case you fail the 200, and on any time you fail the time frame, you fail the 200, that's a bearish sentiment on that time frame. You've broken everything, you bounce up, the failure here of the 200, this is the first time you've really challenged it since you broke it, so you had to anticipate a failure. And this is why our system works, right? If it wasn't the signal itself that got your attention, it would be you knowing that the second attempt at the 200 should typically initiate a failure, and hey, you're overbought, right? That overbought thing again. Can someone tell us on the 1 hour chart, if you look at the stochastic eye and the Fisher transform, that they didn't know? Honestly, no. That would be a lie, because you did know, right? We started to see the money come out. Our indicator tells us that. Instinctively, we're very cautious at the 200 with this first attempt. We're looking for shorts that are overbought. Here's one, right? We can see it on our indicators. So no, it wouldn't be fair to say that you didn't know. And then boom, price falls off a cliff. Whether you took the early signal because you felt good about this doji being a reversal and all this resistance here at the 200, knowing it's the first attempts, and first attempts typically fail, you're in the driver's seat. You're not sitting here going, hey, what happened today? What was that all about? I didn't see that coming. Well, that's because you weren't looking in the right places then. That's all. That's easy to fix. Right? On the daily chart, you were told last week on Thursday to get out. And if you wanted to use our system and cheat a little bit, you would have got it on the 28th or 29th. You wouldn't be sitting here at the 50 going, oh my God, what's going on? You would have had your feet on the desk already. That's why we do this, so that you can monetize the chart. Block out the noise. Forget about all the bullshit. That's not important. You'll see all the crazy stuff going on in the world on your chart. Is this we talked about this. Is this your second equal top? Yes. Failing to break through and make a new high? Yes. I don't know. Maybe you should fade that. We know break one level, find the next. First attempts typically fail. This isn't the first attempt, so you better hope like hell that it holds, because if it doesn't, you're going to the 200, which is logical because you're in a gap and there's all this draw for price. Right? And you just continue to peel back the onion, and what do you see? Oh, okay, because everything is fractal, this is the 30-minute chart, so now we see this failure here and second top. This is the first attempt. This is why we use long-term averages on shorter time frames, because the world's friggin' fractal. Mandelbrot was right. Fibonacci is right. Bachelard is right. Second attempts, first attempts. Boom. So could you not find the confluence that we were speaking about earlier to see where price is going if you were charting YM? Yes, you would. And because you only chart a handful of things, you would certainly have seen this setup. And because you're taking less trades but better quality trades, this thing here would get you excited because it's the perfect setup. Especially off a long-term average. Geez, even this little section here double topped, for crying out loud. You had lots of warning if you were looking for it. And you know what? So you broke this, you couldn't do it, you broke the 20, you break the 50, you break the 100, you break the 200, and so on and so on and so on until you find a place to sit down. Well, chances are it's not going to be in the middle of a volume gap, so probably going to be down here somewhere. That's what price is looking for, a place to sit down. Current price revisits past. That's what's going on. It's as simple or as complicated as that. It doesn't matter what we chart. We see this on everything that we do. I'll take this volume, change it. This is the 10-year treasury. It's called TNX. It's like an ETF. broke all of this to the downside. I'm sorry about the volume profile. Some stocks don't, or some things don't like it. But impulse down, move up, hit the T line and failed. So again, is this a failed breakout? Right. This for me is, so, and again, any time frame when I have this big impulse down and then I see a wick that tries to pierce the T line and fails, short. Right? Like that's just, it becomes instinctive. It literally becomes instinctive. And it applies to everything. I got to take the volume profile off because this is not going to work. So this is oil. We look at oil all the time. We've seen it many, many times. And we continue to look at it because technically it reminds us why we're here. Right? This is the daily chart for oil. We look at it every week. It's not something that's unfamiliar to you. We drew this trend line, or I drew this trend line off a weekly chart as soon as I could connect the second top. And it's pretty true, right? Like it's been certainly reliable, not that we're going to hang our hats on it, but what I'm showing you is it's just the ebb and flow of a market, right? You break all this stuff, you try again, you fail, you find support at the 50 and the 100, and you try again and you fail. And it's just repeat, repeat, repeat. And, you know, when you fail and you break these levels and you find the next, here we are. Here's a failed breakout. Did we take out the previous waves low? Yes. So now what are we looking for? A bench of past price? A place where price has been in the past where it can sit down? Or how about this? Maybe it's 61.66. That it wants, which is right here. What happened? We break the 50? No. Can't close above the 50. We talked about this. Everyone was getting excited about oil, and I said, don't get excited about oil. I'm sorry. Don't mean to hurt your feelings. It's just a chart, but my crayon lines say that you're not going there yet. And you're starting to print a weekly sell signal on oil as you break the 20, and you've already broken everything else. And by the way, why is all this stuff relevant? Because time is important, right? Time's really important. How long does that 1,000 day MA represent on a weekly chart? In years, it's about 40 years. So when you're bouncing from support on your weekly chart from something that has 40 years of price history, it's meaningful. Very meaningful. And the pink line, which is the 500, would be essentially half of that. When you break, and this is kind of, I don't want to take this down the oil rat hole, but we're going to do it anyways. When you break 40 years and 20 years of price history and don't show an ability to break it to the upside, perhaps it's cyclical, or at the very least the signal of a major trend change, which is why, because again, everything that we do is from a fractal perspective, right? We're just peeling onions here. Breaking this amount of price history there's a message in the bottle. And my concern is that if you break this level that we're currently at and start testing that 61.66 number that I targeted way back here, under the assumption that if we continue to break everything and price was to completely break down and not get support, which I believed was in the process of unwinding, which is why that second line was drawn right here, this trend line, is that price would look for this. It would need somewhere that it could sit down and rest, a place where it's been before. So this bench in here, the bottom of these two candles, And lo and behold, the top, which over here, which is the 5 EMA, like we talk all the time, was what I used. Because that's what I believed the price would be drawn to, and that's what it hit. But if we break it, we're in for bigger problems, especially the 6166 number. And I've written before, we are in a new range for oil, and it is not $75 to $100. It is $45 to $75. That is the new range. That's my range, and whether it's anybody else's, but that's mine. The high end is 75, the low end is 45, not 75 to 100. And it's just based on fractals. Just peeling the onion back, knowing how what happens to price if, right? If this happens, X will be the outcome because price is drawn, right? Look at Bitcoin fade a little bit. Can't seem to break that one particular level. Still bullish. Look how we came back and wicked the T line. That's very bullish, actually. And you're making these lows. Are they getting higher? Yes. Are these highs getting higher? Yes. That's bullish. So look for that. That's all you got to do. Just look for that stuff. Do you guys have any questions today at all? Feg to retire.
Have you gone? Hey, morning.
How you doing, bud?
Yes, sir. What's happening, man? How's everything?
Everything is just fine. I just look at these markets and I go, wow, like my head is spinning. You just don't know what's going to happen next. It's like being on a Ferris wheel.
That's what we can do. I was going to ask.
Yeah.
Sorry, yeah, you go.
No, you go first.
No, so I was going to ask, of course, to look into NOMA. I'm not sure if you went over any of the SD tokens yet.
Well, it's funny you say that because that's what I was just going to do.
See, the stars are aligning. The stars are aligning.
Yeah, I wanted to, I know Robbie on Tuesday was talking a little bit about NOMA, and I wanted just to take a second to pull up the NOMA chart, and what I have on here is just a 20, a 50, and a 200, and this is the daily. This at the bottom, I believe, is your asset backing, right?
Yeah.
Okay, and maybe you can explain what that is because I'll probably screw it up.
That's not a problem at all. Essentially, asset backing is just with every transaction. It's backed by BNB. So with every transaction to buy and sell, the tokenomics, I forgot what exactly the percentage is for each one, but with every buy and sell, a portion of that transaction is allocated to the asset backing, to which I think once it hits a certain level, it goes ahead and it buys up BNB. So it's literally creating a floor to which eventually, when that floor price catches up with, for example, when NOMA's asset backing price catches up with NOMA's price in itself, it opens up the floor to so many like different things, from smart lending to, if you want to burn, it essentially creates a guarantee in crypto, which is something that's not, it's unheard of. You can't guarantee anything, but this right here is one guarantee that you have, because each investor, it's like each investor has their own bank account, and that bank account is asset backing essentially. So nobody else can access your account. So let's just say NOMA, for example, has $1 million in asset backing, or a million worth of BNB in asset backing, and there's 500 investors. Each investor, based upon how much NOMA tokens they own, is allocated a specific amount of BNB in their asset backing. Only the investor can access their specific amount of asset backing, not a developer, not a team member. Like, that's totally locked in. And it think back to when oh, that's the perfect. So remember when the U.S. dollar was backed by gold?
Yep.
What that did was, I don't know if anybody like really is into history or understands the currency back then, but that essentially turned the U.S. dollar into the world's currency because of that value that was had when you can turn in your dollar
Okay.
and receive at a particular amount of gold. This essentially gave the U.S. dollar a particular value that no other currency had, and that's why this bringing this concept to crypto makes this so powerful, because if asset backing made the US dollar the world's currency, imagine what asset backing is going to do to cryptocurrencies that has it as
So,
well.
so just so I
Like it's
understand,
truly revolutionary stuff.
so
Go ahead.
when, so would it be, is it safe to assume that the longer the project's around and the more money that comes in and out of it, the more transactions, I guess, that the higher the asset backing level goes, and then
Correct.
the asset backing percentage that goes to the holder, is that based on what they have put in, or is that based
Yes.
on what they've put in and then the added transactional activity?
So you can't add into asset backing. Asset backing is just literally, that's just the code itself. So once you buy into any token that has asset backing, just think that you're automatically signed up with a asset backing bank account. Just look at it like that.
Okay.
And the token accumulates BNB or whatever, when we expand to other EVMs. It could be Bitcoin, it could be Ethereum, whatever that project will want to choose as their asset for asset backing. It's like a black hole. It
Okay.
never stops buying. You can always adjust the tokenomics, but it will never stop buying. And the percentage that you're allotted is based on how much tokens you own.
Okay. That's what I, okay.
The
So
more tokens you own, the higher the percentage.
gotcha. Okay. Cool. So that makes sense. This is the 4 hour chart of NOMA. And I just pulled up the 4 hour because I see the activity here at the 50. And again, is all I'm running 20, 50, 200, 500, and 1,000. It's a 4 hour chart. So, you get a nice pop off the 50 MA, a nice little continuation off the 20. These are things that we would look at anything else that we've looked at today. We can look at it no differently. What we're waiting to see here is, how does price deal with the 50 MA? Will it interpret this as a first touch bounce, or does it break down a little bit and start to pull back? Will it break one level and find the next, or will it bounce and take out the previous wave's high? And we can just kind of use fractal analysis and just peel the onion back. I'll use the hourly, and on the hourly we can see that it kind of has failed the 20 and the 50. So I'm inclined to think that maybe it might want to find this level on the 1 hour. And, you can pull it back a little farther. And pretty much the same look. So this is kind of structural in here, whatever level this is, kind of through the bottom of these candles. If you were to break that, then, you might be inclined to try and test these areas. But these things, again, they're not the end of the world. They're just, if you're a long-term holder, they're just opportunities for you. That's all. Right? That's it. This is a daily, same chart. You can see how that divergence is starting to close a little bit, but it's still bullish, right? We haven't completely broken the T line or anything like that. But if we do, what are we looking for? The 20. And if you don't hold that, the 50, and so on and so on. We can do the same with XPX while we're here. Let's go to the daily. Now, XPX doesn't I don't think it has as long a history as NOMA does, but we're still going to be able to use our methodology the very same way. So basically what your takeaway is that what we do here, you can use in DeFi, you can use in crypto, you can use in commodities, you can use in stocks and bonds and everything else. What we're tracking is how price moves. It is not asset specific. Okay. So, nice move here from the 50. I know Rico would appreciate that. Continuations off the 20. You tested the 50 and you bounce, and now you're testing again. These are things that we do and see on every chart we look at. We back up to the 4-hour, right? And you can see you have support here of, you wicked the 200 and held it. Let's see if you base out and try and break this level, which is the 20 and the 50, and take out the previous wave's high. Right? And it's just rinse, repeat, rinse, repeat, rinse, repeat, and you just continue to use these multiple time frames to validate where you are, where price is on a chart. That's all we're doing. We know what this resistance is. And as long as we know that, we can have a plan. I really want to know what's going on here before I would do too much on this time frame, but are there shorter trades there on shorter time frames? Yeah, probably. But I think the 4-hour gives away a lot of secrets. So up here, everything. You failed everything. And this is your first attempt at taking this level. If you take it, you're certainly going here, and you're probably going to try and test those highs again. Fail it, and it's a matter of, looking again if you arc down for some support, and if you don't hold those, the previous wave's lows. So, but I want you to, that fractal analysis is really important. The other thing quickly that I wanted to show you today is we've talked before about trading journals and documenting your trades, right? And what you see on your screen is a trading journal that I've put together for Blunhouse, and everybody here is welcome to have it as well. It's quite detailed, and it's in a PDF form. And the intent is to get you to document your trades, each and every one of them, in as much detail as possible. And I know this might look overwhelming, and perhaps it is in some perspectives, but try and be as diligent as you can in getting good about filling this stuff out. And the reason that you do it is simply because when things go sideways and you are tormenting yourself on what's gone wrong, you can actually look back at this and have an honest and open conversation with yourself, because you're a professional and you treat this like a job, and you can unwind this, and you'll quickly realize where you've gone off track. You will reflect on your success, and you'll be able to reflect on some failures, and you'll be able to course correct yourself. And of course, there's, I'm always here to talk to, and there's other people in our Blunhouse group as well. But this is available for whoever wants it. And again, you're more than happy to take it. And also, based on, because we were talking about fractal analysis today, this is something that I actually have presented several times to some MBA classes. And we talk about Mandelbrot, who is all about fractals, and Fibonacci, who you're familiar with, and of course Bachelard, who's familiar or responsible for some of the math that is we use in our filters. All right, so if you're interested in this document, it is also available to you. You just have to reach out to me, and I'm more than happy to supply it to you. But I would highly, highly, highly recommend that you start to read about Benoit Mandelbrot. So my trading philosophy is based on three pillars: fibs, fractals, and filters. Basically, These three dudes. Okay. Mandelbrot, Bachelor, and Fibonacci. So again, this document's available to you as well if you would like it. If there's any more questions, just belt them out. And if not, we can pick this up early next week and we'll kind of see how we did.
And did we go over FEG as well?
You know what? I don't think I did when I was in there, so let's do that. There we go. I'm just going back into the FEG token. So here's our FEG chart, and this thing's been kind of flat on the longer time frames for a while, and we know why. But it doesn't mean that you don't accumulate while you have that opportunity, because we've seen what's come out of these long, flat consolidations. Price explodes one way or the other, and because typically stocks and assets want to go up more than they do down, we do get an exceptional opportunity to accumulate at, areas that at one time we thought we would never see again. But it doesn't mean that you can't trade things in between. And, if you're, and this is a really good example, if you believe in a project and what it has to offer, like Smart DeFi or, XPX, XPX is an example, you have the opportunity to take your trading profits and just increase your bags. Have a nut that you use to trade with, and because you mitigate risk and you set targets and you automatically are taking profits frequently and you're taking less trades and more good trades, you're going to be able to build the bags of the things that you want to trade or want to own, not just want to trade. Right? So whether you want to trade FEG in order to create more FEG, or trade Bitcoin in order to buy more FEG, whatever you want to do. That's kind of what I do. Right? Take my trading profits and acquire other things that interest me. Don't necessarily have to trade everything all the time. You can acquire and hold. And look, if we go back to the XRP folks, they're a real good example, right? They're a real good example of sticking it out. Come hell or high water, they stuck it out, and they were rewarded. And you can't do anything but applaud those people. Like, it wouldn't be very classy not to, right? Like they they really did take it on the chin for a long time, and ultimately got their day. Is there more chaos in the making for them as they move forward? Probably, but that's life, right? But I think they've demonstrated that you can easily just buy and hold. Just pull up the monthly. This was just nothing for the longest time. Like, this is a monthly chart, so, you're into years, right? Nothing happened. Nothing of significance, and then all of the sudden, right? So there's a kind of an expression.
That's FEG. That's FEG's faith.
Well, that's what everybody's banking on, right? That's,
Yep.
you buy the bottom of the pan, and then, hopefully you get your lift off, and you have an opportunity to acquire significant amounts at a good price, whether it was XPX or XRP or anything else. Right? Yeah, this is a chart that everybody wants to love now, but nobody really wanted to touch other than the dedicated for years.
Right.
Right? And, that's where being, like, I'm sure a lot of the XRP people felt like outliers for the longest time, right? And you really have to be dedicated and committed, believe in the technology, and, the wind and sun, the moon and sun and stars have to line up for them as well, right? But it did a little bit. So, you have to applaud those people. And hopefully the same happens for the FEG crew. The day will come. And listen, I've been there when it happened. So, yeah, when when it does do that, everybody will know, right?
Exactly.
So, yeah.
All hell will definitely break loose.
Yep. And it will be an absolute blast to watch. Like an absolute blast to watch.
For sure.
So, yeah. So what's Solana doing? Hanging on to the 500 MA on the daily, it looks like. It just happened to, that was the only thing on the chart, but that's what it's doing. Rolled over, trading above the 20, the 50, and the 200. You had to accept, at some point in time, that's going to happen. There's the rollover, break the 20. Actually, you found the 50 and the 200 all at one time. A little bit of bounce. We just don't know if this is a failed breakout yet, or you get enough momentum to try and tag the 20. Right? This is just rinse repeat, guys. There's a handful of rules. If you're not in our Blunhouse TA on Telegram, I believe there's an invite on Twitter, on X rather. If that fails, just reach out to me. We cover this stuff all the time. If you're interested in some one-on-one time, we have a Blunhouse premium room as well where you can get one-on-one coaching, and just reach out to me and I'll talk to you about that as well. So yeah, if there's nothing else today, we'll close this down until Tuesday of next week, and I have a feeling that tomorrow's going to be a wild day, so the beginning of next week should be an interesting stream when we do it. So all right, guys. I will see you next week. Thanks for joining us, and I will talk to you soon. Bye for now.